I think I'm recording. I've never done this before, and we're all new at the Zoom conference meeting. But I just really felt like this was really good, important information to hear, because every time I turn around, somebody's asking me about the word forbearance and what if I can't make a mortgage payment. So I invited Nicole Stearns, who I have used as a lender for many, many years. And she's been in the business for 30 years. So I thought she was a really wise woman to talk to with regards to anything loan related. She's a loan officer and the managing broker, branch manager for Fairway Independent Mortgage in Kent. And I welcome you, Nicole. Thank you for sharing your wisdom with us.
Rosie, thank you.
I have our two buyers agents. Great. I have our two buyers agents, Karen Haig and Melissa Hudson, because we wanted to have a conversation with Nicole, because I know that our questions are similar to what our clients are asking us, and I'm sure you've been inundated, Nicole, with questions as well.
Definitely.
So we want to know, what is a forbearance and what does it mean if they can't make their house payment? What are their options?
Yes. So a lot of people have the misconception that forbearance is the forgiveness of payments, but forbearance is really just a pause in your payments. So it's where the government has came in with the CARES Act, and any client that's adversely affected by the COVID-19, they can put a pause on their payments. So in the CARES Act, it's actually giving a homeowner up to 180 days with another 180-day extension. So most lenders, it's going to be determined by the servicer. So it's not an automatic thing where a client can just say, oh, I lost my job or times are a little rough, I can stop making my payments. They cannot do that. So the question is what do we do?
Yeah.
They need to reach out to their servicer. So whatever the situation is, whether it's they need information, because there's a lot of information being floated on the internet, social media, etc., and some of it's accurate and some of it's not so accurate. And how it, yeah. And how it affects each individual is different than what it's going to affect another individual. So the first key to remember is it's not a forgiveness of your payment. It's just a pause in your payment. So another question they have is, well, if we pause our payments for, say, 90 days, what happens with those payments? A lot of people assume that it gets just tacked on to the end of the mortgage.
That's what I've been.
That is not forbearance. That when it's put at the end of the mortgage, that's actually called deferment, where they're deferring those payments till the end. So forbearance is strictly, they're going to pause your payments for an X period of time. It will not affect your credit during that time, as long as you've set it up with your servicer. So again, it's not automatic.
Okay.
If you're strictly in forbearance, you have typically 4 options once the forbearance is done. Usually what happens is it's reinstated. So for instance, if you did forbearance for 90 days, whatever your payments are for those 90 days, on that 91st day when you owe your 4th payment, you're going to owe the payments that you deferred plus your 4th payment, which could put a financial hardship on a lot of people.
Yeah, absolutely. Can you?
Oh, sorry. Go ahead, Rosie.
I was going to say, my first question about that is there also a penalty payment tacked onto it for interest? And can they work something out where they can do it over a few months instead of right away?
Yeah. So there is a loan will continue to accumulate interest just like it normally would, but there are no late charges and you're not paying interest on the late payments. So it's just going to kind of pause the payments, kind of pausing your amortization, and then it resumes on that 4th month or whatever period of time that you have done forbearance for. So that's true forbearance. Now, most lenders are going to have other options because they realize that after someone, say, has been out of work and in a financial hardship, you're not typically going to be able to make up all those missed payments at the end of the forbearance. So your options will typically be based off of what type of loan you have, whether it's a government loan or a conventional Fannie Mae Freddie Mac loan. And this is another thing. So when you call your servicer, you need to ask them, what are my options to pay back the forbearance once I'm at the end of the forbearance period?
Right.
So the typical options that they're going to give you are going to be one, reinstatement, which is what we talked about. You owe the whole amount. You will have a repayment plan. Well, they will actually set up, okay, this is how much you did in forbearance. Now we're going to tack this amount over the next 12 months. So your payment would be, your normal payment plus paying what you had in forbearance. And then you can do a deferment, which is where it's tacked on to the end of the loan, or you can do a loan modification. Now, the key question is, which one of those will affect my credit? Because in forbearance, it will not affect your credit. And that's what the CARES Act that the government put in place protects. The CARES Act does not set up what happens after the forbearance. So for instance, if your lender says, hey, you have to make your payments back at the end of the forbearance, or it will affect your credit, you need to know that before you do it.
So you are rules different from every servicer, every bank? Okay.
Yep. Yeah. And the government is coming out with guidelines. Fannie Mae and Freddie Mac will issue guidelines. FHA and VA, the government, they'll issue, standard policies. They're still working through all those. I was just talking this morning that I'm getting emails pretty much every hour with policies changing. So even myself, just trying to keep up with it. But the key thing is for the clients to know is you have to ask your servicer these questions because they're the ones who are going to put the rules in place. They're the ones who are going to report to credit bureaus, et cetera. And you need to know how it's going to affect your credit and what are the rules behind. I read one thing this morning that you could only do a loan modification if you were only 2 months behind in your mortgage. So what if you if you do a forbearance for 6 months? Can you do a modification and have it not affect your credit? That would be a question for your servicer.
So I have a question. Is forbearance always the first step, or can a client go straight to a deferment? Like I want to, the next 6 months are going to be challenging and put that 6 months. Is that something that can happen? And if so, is that something that varies from lender to lender?
I believe that if the servicer would allow that, you would not want to do that because the only thing the CARES Act protects you on is forbearance, and the forbearance will protect your credit. So
I'm just thinking though that a forbearance though, if indeed you get to the end of your forbearance, if you're not in a position to pay your mortgage for 3 to 6 months and you get to the end of the forbearance, you're going to have to put some program in place anyway. You're going to have to go with one of the options that you talked about.
Yes.
Would it be easier for a client? I get forbearance for somebody who says, I'm going to sell my home. I'm planning to sell my home. If forbearance would hold off mortgage payments and then things would reconcile at close.
Right.
But forbearance for somebody who's either not working or already challenged, it would seem going straight to a deferment could work more advantageously. You wouldn't have to go through the process twice.
So the key is that the key is on the words that you're using.
Okay.
You always want to do forbearance first because forbearance is pausing your payment. So you can't go straight into a deferment because you haven't paused any payments yet. follow me?
So when people are talking about how there's also a forgiveness program, that's false information. That's not a thing that they're offering.
Correct. There is no forgiveness.
Good question.
But there's forgiveness during the forbearance if, in fact, you can make all the lump sum payments when you come back from forbearance.
Yeah, but it's not forgiveness because you're paying it back.
You're paying it back, but it's not a ding on your credit, right?
It's not a ding on your credit. Yeah. So they're forgiving the credit ding.
Yeah, they're forgiving.
That's a huge.
Oh, she's freezing up.
This is really good information because I think it's really deceiving, the information that's out there. People think that they're getting forgiveness and that a deferment is actually what's happening, when in fact they're going to be hit really hard at the end of their forbearance to make a challenging decision, or
Yes.
I mean, or face really kind of ugly repercussions. If you get to the end of the 4 to 6 months or year or whatever of the forbearance and you cannot pay the money back, options again are renegotiating a deferment.
So you have four options, and it's dependent. They're similar, but it's different if it's a Fannie Mae, Freddie Mac loan, or if it's a government loan, so FHA or VA, etc. So one is reinstatement. You pay it back at the end of the forbearance. The second option is you go into a repayment plan. The third option is to do a modification. And then the fourth is to defer them until the end. So
what's the difference between a modification and a deferment?
A modification may be like, let's say you did a forbearance for 12 months. So you have 12 payments that is due. They may modify and say, okay, your loan balance is X plus the amount you owe us on the 12 months payments is X. We're now going to re-amortize that loan and modify it over this many years for you. So maybe you're 5 years into your mortgage right now, and so you owe 25 years, and they may do a modification over a longer period of time. Each lender will set up their own requirements and give you the option. So in your question, Karen, kind of going back to your original question, you said, well, can we go straight into deferment? What you want to do is you want to talk, when you talk to your lender, the servicing lender, and say, okay, this is what I need to do. They're most likely going to start you out with 90 days because we're in a situation we don't know how this, will affect us for how long. So they will typically start you out with 90 days, extend it to 180, and you have the ability to extend for another 180 days. So that's probably where they will start you out. But however they start you out on your forbearance, what you need to do is you need to ask, okay, what are my options at the end of forbearance to repay payments back? And I think, like you said, Melissa, a lot of people think this is a forgiveness of your payments, that you just, at the end of it, you just start back up to normal, or that it's tacked on to the end. It's not deferment, it's forbearance.
So go ahead, Melissa.
Thank you. That could be an option after the forbearance, right?
Yes,
that was
correct.
my question. And then if they did that option where they did a deferment or a modification, how does that affect their credit, their purchasing power?
So that's where they need to ask their lender, because the CARES Act has strictly only addressed forbearance. So the other items that we just talked about, the four options that they have once the forbearance is done, that is going to be determined by the insurers of the loan, and the servicers is my guess. So of course, if you reinstate it and you pay it all back, it doesn't affect your credit. They need to ask their servicer, what are my options? I've heard these are the four options. Now, with those options, will these affect my credit after that time? Because the CARES Act is only protecting during the forbearance.
These are really good questions to be empowered with, because the servicer may not give them the options.
Right.
They probably don't want to give the options. They want the money, right?
Yeah, correct. Yeah. So the one thing you got to
and so it
realize.
seemed to me that, oh, go ahead, Melissa.
Okay.
Go ahead, Karen.
It would, and really the word forgiveness is shouldn't even be in the vocabulary, because
Right.
there really is no forgiveness at any stage, at the beginning or even the options. Ultimately, you're accountable. It's not as though they're saying we're just going to let you off the hook. They're just saying it's going to be due at a later time,
Right.
in one form or
Yeah.
another.
And Melissa, you have a question too?
No.
No, I do. So say they don't choose to do any of those options, but our client just is struggling and to make the payment on time. They're making partial, they'll make it late. If they're about to buy a house, would this be considered an isolated event that won't affect their credit to buy something? What are your thoughts on that?
Okay, so you kind of asked two questions in one. So the first question is if they are struggling to make a payment. So let's say you lost your job and you're receiving unemployment, and your unemployment is just not going to be enough, but you don't want to do forbearance because you don't want all that payment adding up. And so you want to be able to make a partial payment. You still need to contact your servicer and go into forbearance. Okay. In forbearance, you do not have to forbear your whole payment. So that's the point of it, is you can still make as much as you can towards that payment, which will lower how much you're going to owe at the end of the forbearance.
That's a good idea.
It's super important to call your lender and go into forbearance, because if you only, first of all, mortgage companies do not allow a partial payment. So if just as things are going normal and you try to make 50% of your payment, the lender's going to send it back to you and say, we don't know what this is for. We don't accept partial payments. But when you're in forbearance, they will accept a partial payment.
How does
The difference also is, while you're protected by forbearance, you will be protected on your credit rating. So it will not touch your credit. So 10 years from now, we will never be able to see, oh, they didn't make their payment. We will never see that while you're in forbearance.
That's the forgiveness part of it.
The credit, yeah. And there's no late charges accumulating on those late payments.
That's the forgiveness there.
Yeah. Yeah.
How does one go about going into forbearance? The servicer and say, I want to go into forbearance. Simple as that?
Yes.
Okay.
Yes. You do not have to show proof. You just have to call them and tell them you've received hardship due to COVID-19. Now that's the hard part, because people could take advantage of it. But they're putting it out there for everybody. If you feel that you've been affected by it and you can't make your payment, then you can call your servicer. There was a study done within the last couple of days for one servicer where they had maybe, we'll say, 10,000 calls on hold, and 80% of the calls, because the wait time was about an hour, 80% of the calls dropped off in 30 minutes because they didn't want to wait. So if you are calling your servicer, it's important to call early in the morning and wait on hold. Do not hang up, because everybody else is also hanging up. And if you just hang tight, your call will be answered and it will get taken care of. You do not want to wait till the last minute. Be early, be ahead of the game. If you go into forbearance and you can still make your payment, it's okay. You've avoided an extra payment that you're going to owe later.
That's really good advice. Do you guys have any questions for her?